So if you've been trading stocks, and you probably have heard or seen this thing called a failed breakout. You know, it's that thing where a stock looks like it's breaking out, but then it stuffs, dumps, and you lose all of your money in that trade. Well, I have dealt with these failed breakouts many times in my trading career, and I've developed some tips and tricks that can help you avoid these failed breakouts. And I'm going to be showing you these examples on trades I took today where I made over $1,500 avoiding the failed breakout and actually holding for a winning trade. So we're going to be breaking down some key concepts that will help you avoid these failed breakouts in stocks to help you better improve your win rate and improve your profitability. All right. So if you enjoy those things, make sure to hit the like button during this video. And if you have any questions during the video, save them and leave them down below in the comments and I'll get back to you ASAP. All right. So with that being said, let's jump into the lesson. So today we had a pretty small watch list. We had 3 names on the list. We had TMPO, we had INAB, and we had ACON. We had overall the same kind of breakdown for all of them, right? We just wanted to wait to see if they were actually bullish. So what I mean about this is that, very simply put, at least my definition of a stock being bullish or bearish, at least from pre-market into market open, it's dictated by the pre-market high and low. So if a stock breaks out above its pre-market high, then it is bullish because it's probably going to run all day. If a stock breaks down through its pre-market low, then it's probably bearish. And until it breaks those 2 points, you don't really know what it's going to do. So instead of trying to guess in between the pre-market high and pre-market low, I just simply say, hey, I like this stock, but I will only trade it if it can break out above its pre-market high and then use the pullback as support to get in and then ride it all day. And now you could do this as a short seller as well, right? Like, you know that if a stock breaks out over its pre-market high and keeps on holding previous resistance as new support, you know that overall it's bullish and it probably wouldn't be a good idea to short it because, you know, if we just go back to last week, like CXAI, yeah, this thing had a ton of range on day one where you could have probably scalped some decent shorts here. Like say maybe you got short at 964, covered at 750. Yeah, maybe you could have made a good trade, but all those shorts who held on for the bigger gap down, thinking that it was now the top, well, they got squeezed out and this thing went to like $70 in pre-market. So you can see for CXAI, this thing was able to break out above its pre-market high. And ever since it did that, it was all day bullish, right? So that's what we want to capture as longs, because the ones that are above pre-market high, those ones can do stuff like these crazy multi-day runners. And that's where I want to position myself always, right? Like I want to always be in stocks that have the potential to technically go $200 per share. So the one that did work out really well was INAB. If you look at this in pre-market, this thing was just kind of running into market open. Now, I usually don't like stocks that do this because it's very easy to, you know, buy into the top of them. So in the watch list, I had 2 main setups. I was like, okay, either we see it do that big pullback all the way down to like 154, the previous resistance intraday, or we just wait for it through the market open and see if it can break out. It seemed like it was making its top right near 270s. So I just waited, right? I didn't want to buy any of this. There's no edge here to buy at 225. So I just waited through it. And eventually you can see it did break out, right? So it broke out over 271. We know that that is the pre-market high. So I want to buy that as new support. Now with this strategy, I just plan it in the same way every single time, where I tend to use just some lower support level as my max loss. Here in this case, because the range was so big, I chose to use this kind of micro pullback right here just after a VWAP, right near 245. So I'm going long 271, max loss 245. Now, of course, first target is going to be right up at that first resistance right near 307. Now, before we get any further, it's important to note that on the weekly chart, the next main level of resistance is like all the way up near, like, you know, there's one level right near 362. And next main one's up near like 413. The reason why I show this is because this is where you're going to lock in partial profits along the way if it spikes, right? You want to have limit sells waiting at those points so that, you know, if it does spike up, you have a chance to get filled. So you can see the stock had a very clean pullback. And most importantly, you know, you can see that it actually had the breakout, right? Like you can see a full green candle closed above 270. So that is a lot stronger of a breakout because it actually broke out on the 5-minute chart. Now, of course, there's always the chance that the breakout doesn't hold and it's going to be a failed breakout, but at least waiting for that first candle to actually show that it's a breakout makes your odds a lot higher than if you just bought right into the breakout right away. But you can see this one held perfectly, held support, and the 5-minute candles never broke underneath, not once. And you can see this one actually took a few tries to actually break out. So you can see right here, I got my first fill on the partial profits right near 11:40 a.m. market time. And then we had this weird action here on this next candle where it kind of was very volatile. But because I wait for the 5-minute candle to actually close, it didn't break down. It didn't make a failed breakout. It just kind of, if you look at the line chart, it just tested support and resistance. So no reason to change the plan. Ultimately, in this trade, as long as previous resistance holds as new support, I'm staying in it. So I just waited, tested support again, tested resistance again. It kept on consolidating, and then it finally broke out. You have to understand like how much time this is, right? Because right now when you're looking at it, it looks like an instant, but it took this stock from 11:10 a.m. all the way to about 1:20 p.m. to actually break out. Do you have the patience to sit with a stock for that long with it just going sideways? Probably not. And that's what you really have to work on as a trader, right? You have to be able to just sit with a position. As long as your plan remains intact, you have to have the patience because these big moves, they usually don't happen in 5-10 minutes, right? You need to be able to leave your money in the market as long as your plan stays true. And then finally, you can see it broke out. I had limit sells waiting up at 360s, locked in the profit there into this big spike, but I didn't get the higher profit up here near 390 because it just kind of topped out there. And then from here, once it broke out over $3, right? The new plan is as long as it can hold 305 as support, it's overall bullish. You can see it tried bouncing back up, couldn't go anywhere, eventually failed. So once that failed, I knew, okay, time to exit, sell into this previous level of resistance as resistance again, and exit the trade. And now I'm all done with it. So that is a very classic day trade. And you can see that, winning trades, you have to be able to kind of stay patient with your setup, let the plan play out, and don't just buy the first thing the market open, right? Like if you look at my breakout scanner, there is a ton of stocks on this, right? So many different ones like SFR, GETR, but none of those really had any edge, right? And the goal of trading is not to just trade anything that moves. The goal is to trade your system perfectly every single time, and then just use the stocks as kind of a vector to trade your system. So before we move on to the next point, if you could do me a big favor and just hit the like button for the YouTube algo if you enjoy this content, I'd really appreciate it. Also, if you want to see more videos like this, make sure to subscribe and hit the notification bell to be notified of future videos. With that being said, let's get back to the lessons. Just going back to today's watch list, right? If you look at the first one, TMPO. On the watch list, we said, yeah, it's first screen day with news, but I'm just going to wait until it could break out and hold above its pre-market high. So now one thing I do that makes it very, very simple, you just, visually see this, is just use the 5-minute line chart, right? You don't have to get crazy with candlesticks. You just use the line chart, and you can even just have a price alert, right? So whenever there's a ton of stocks on my watch list and I can't watch them all, I just put a price alert that will let me know if a stock breaks out. So then I know, okay, I'm not going to trade unless a price alert gets triggered. So no need to, watch the stock constantly. You can see this one, it never broke out above its pre-market high. So even though technically you could have made some profit on like a bounce here from $1 to, maybe 114, it's just not worth it, right? Because it's not really bullish. So why even tie your capital up in something that's not going to be a crazy squeeze? And you can see this one traded all day. So that was definitely not a good stock to get into. The next one we had was ACON. So for ACON, I had this on the watch list. We said first green day with news, and it's a nice size flow, and the pre-market high is right around 140 147, 148-ish. That's what I was looking for. We knew that we had pre-market support down near 120. And I didn't want to trade this unless it broke out above its pre-market high. So you can see eventually you had this first candle here where, you know, like 10 minutes after market open, it had this big bounce up. It halted and then unhalted into 150. Let me just use the 1 minute chart just to kind of show this, because this is how easy it is to go into a trade with a decent idea. But if you get FOMO and you execute too early, you could be buying into a failed breakout. You can see for ACON, if you were using the 1 minute chart, then yeah, it probably did look like a breakout in the moment. But at least for me, I don't want to buy into breakouts, right? The most I want to do is like buy that little micro confirmation pullback after the breakout. But that means that you need to at least see the breakout on the 5 minute chart. What I mean about that is that you quite literally have to wait until the 5 minute candle closes. And so this is a common thing that happens with a lot of newer traders, is that they don't get a grasp of, like, you know, when they look at a chart, like they don't get a grasp of like, hey, this is a whole day's worth of price action. They just see it in an instant. If you look at a stock like this, right, you don't realize off the bat that when you're looking at this, say, hey, this took what, from 10 a.m. to nearly 2 p.m. It took 4 hours to break out and pull back, right? You just see it in an instant. So ultimately, for me, I just want to wait until the 5 minute candle closes. And then I know, okay, yeah, it's breaking out, because you have the time to wait, right? These stocks, even though they move very fast, they don't move in an instant, and you have the time to wait. So on this first candle, you can see it did not break out, because if you just use the line chart, you can see it just tested resistance. It didn't even test resistance on the line chart. So no need to FOMO into that breakout, right? Wait for it to actually break out. Then it tested up again. Now this one did in fact break out. You can see nice full green candle, mostly above the line, halted up at 166. And now because it's halted up, I figured, okay, we might have a decent opportunity here to actually go long using 150 as support, kind of buying that the micro pullback after the breakout. And I had a limit buy at 151, and the stock unhalted. You can see it bottomed at 151, but I did not get filled. So yeah, I didn't trade this one, but still it fit the system very well. Ended up running all the way to like 225, 236-ish. A nice nearly $1 per share move to the upside. And then eventually when it did pull back down, I did get refilled just because I had the same order waiting out there. And for that trade, my plan was to, you know, lock in my first partial at first resistance 216. And you can see it did break down. But because I managed my risk, like we talk about in, you know, so many videos, I just sold it back into break even at like 147. So I lost 4 cents, but that's fine. And you can see now that it's failed, it's really selling off. All right, so if you stuck through that whole video, then hopefully that means that you learned what you're looking for and you enjoyed my teaching style. I run a trading community and mentorship program called Trade Buddy, where I teach everyday traders just like you how to get profitable with their trading strategy using something I call data-backed confidence. If you want to learn more about this, the link's down below. We have a free 14-day trial. The link down below to join. And I'll see you in the next video.